Hi guys, it's Bilal from Tax from Northwest London, bringing yet another video on self-employment. The last few videos we've done on self-employment, we try to uncover what kind of taxes you actually pay as a self-employed individual, and went into quite a bit of detail to help you understand exactly what each category of income tax is and what each category of national insurance is, and which category you would most likely fall under. In today's video, we'll go in a bit more detail in regards to tax planning and try and make sense of it all by giving you some real life examples and identify how you can use these kind of methods to reduce your tax bill. The first example is about Saima. Saima registered herself as a self-employed individual a few years ago. Her taxable profits for the year are £55,000 and therefore is classed as a higher rate taxpayer in terms of income tax, and will also be paying the highest rate for national insurance. Therefore, her marginal rate of tax would be at 42%. If Saima incurs tax deductible expenditure for £1,000, then she should be able to reduce her tax bill by £420. This is due to the fact that she is on a marginal rate of 42%. This can make sense if you think of it as every pound that Saima spends, 42% of that is being taxed, which is 42 pence to every pound. So if there's £1,000, Saima saves £420 as she's reducing a tax bill by spending that money on expenses. The second example is about Aisha. Aisha also registered herself as a self-employed individual and expects to make about £35,000 in taxable profits. As Aisha is making £35,000, she will be considered as a basic rate taxpayer in terms of income tax and will be paying 9% in national insurance. Therefore, her marginal rate of tax will be 29%. If Aisha spends £1,000 in tax deductible expenditure, her tax will be reduced by £290. This is due to the fact that Aisha is considered a basic rate taxpayer and is paying national insurance at 9%, and therefore a marginal rate will be classed as 29%. So going back to the example of Saima expects her taxable profits to be reduced from £55,000 to £30,000 next year due to the coronavirus. If she was to spend her £1,000 next year in tax deductible expenditure, then she will only save £290 as the marginal tax rate will be reduced to 29%. If Saima is able to spend her tax deductible expenditure this year, then she will save £420 this year as her marginal tax rate this year is 42%. In terms of Aisha is an online retailer and expects her taxable profits to be increased from £35,000 to £55,000 next year. If she was to spend her £1,000 in tax deductible expenditure this year, she would only save £290 as the marginal rate tax is set at 29%. If she was to defer her taxable expenditure to next year, she will save £420 as her marginal rate will be increased to 42%. So judging by these two examples, if you're one of those business owners who have been affected by the coronavirus and are expecting your marginal rate to reduce from 42% to 29%, then perhaps it's a good idea to defer your expenditures to next year so you can get the most amount of reduction in your taxes. If you think your marginal tax rate is going to be the same as next year, then accelerating your tax deductible expenditure will merely transfer some of your taxes to next year. But if you think your marginal tax rates are expected to change, then the timing of tax deductible expenditure is very critical. Before we conclude this video, it is important for you to understand that the marginal rates we've been referring to in this video does not mean that your entire income gets taxed at 42%, for example. The 42% is only taxed at the top slice of your income. So when you take into consideration your personal allowance, your basic rate tax band, and your national insurance, it averages it down to 26% only. So on average, if you were earning £20,000, then the total tax you'll pay on your salary would be 13%. On £30,000, you'll be paying 18%. £40,000, 21%. £50,000, 23%. £60,000 will be set at 26%. £70,000 at 28%. £100,000 at 32%. £150,000 at 39%, and £200,000 at 41%. This table will most definitely help you in planning your tax properly. I hope you found this video helpful today. The next video will explain what expenditures can be tax deductible to help you further on your tax planning. Make sure to leave your thoughts and comments below and like and subscribe this video. It gives us much needed support to keep making content for you. This is Bilal Khalid from Evo Tax signing out.